Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because today we're going to answer the question on everybody's mind. When is Bitcoin and the crypto market as a whole finally going to enter its mania phase like we saw in late 2020, early 2021, and like we saw in 2017? And we're going to use the inverse correlation between the US dollar index and Bitcoin to try and figure that out, because the past two mania phases had a very distinct scenario, and that's an aggressive, prolonged drop in the US dollar index. So we can use what happens with the US dollar index to figure out exactly when Bitcoin's next mania phase is going to start, and also what type of cycle we're going to have: a left translated cycle, a normal cycle, or a failed cycle. Of course, a normal cycle would be the US dollar index rallying over the next few months and then reversing and falling aggressively. That would result in some downside and then a higher move later in the year and definitely in early 2025. A left translated cycle would mean that the dollar index has to start dropping a lot more aggressively a lot sooner, because the Fed surprises us by cutting rates earlier and easing more aggressively, either as a result of the labor market or something breaking in the economy. And finally, the failed cycle would be some type of black swan event where the Dixie absolutely skyrockets to new highs as the dollar milkshake theory and dollar wrecking ball theory start playing out, because all the other currencies around the globe devalue very aggressively against the dollar because their central banks have to ease policy aggressively while the Fed can remain more hawkish, because of course the Fed manages the world reserve currency, which has its own dynamics and passive bid that the other currencies do not. So for me, it's very clear that by far the most likely scenario is the normal cycle, but I am very open to the left translated cycle because the Fed has surprised us with their dovishness in the past. And now that the unemployment rate is going up, I think the political pressure here in the US and globally will start to increase quite a bit now that other central banks have begun to ease already, like the European Central Bank and like the Bank of Canada. And if we look at what's in the US dollar index, it's just a basket of currencies around the world, and the majority of it, almost 60%, is the euro. So what the European Central Bank does in relation to what the Fed is doing with their interest rates has a huge impact on the dollar index. I think this deflationary bust Dixie to new all-time highs is very unlikely, so I think we can remove that one. And then this scenario where the Fed starts cutting very aggressively today with CPI where it is, I think is also a little bit difficult to justify, but I'm still open to it, and that's why the default state of my portfolio is generally bullish. I always have some cash on the sidelines, but I like to stay pretty risk on because I think the dollar is going to get devalued eventually in the long term, no matter what. This is mostly short to medium term preparation, but I do think this scenario is pretty unlikely as well. And that's why the normal cycle has always made a lot of sense to me. We've had an amazing move since the end of 2022 when Bitcoin bottomed, and some consolidation, some reaccumulation, and cool off would make a lot of sense to me here. And that also aligns nicely with my thesis for the dollar index. But of course, we're going to get a lot more clarity on this when we have that FOMC meeting on Wednesday. We're going to see what the updated expectations for the unemployment rate by the end of 2024 will be. We're going to see the updated expectations on where the Fed sees inflation by the end of the year, where they see GDP, but most importantly, we're going to see their end of year projection for where they're going to keep the Fed funds rate and where they're going to have it in 2025 as well. And I do expect markets to react to these updated economic projections. And if they give us an indication they're going to keep rates higher for longer, that would put quite a bit of upward pressure on the dollar index in the short term. And we're going to have to continue to monitor the economic data like inflation and the labor market to try and figure out when the Fed will be able to ease a lot more aggressively and put more downward pressure on the dollar index by devaluing the dollar. And for those reasons, the normal cycle is by far the most likely in my opinion, which is why I'm relatively exposed to the market, even though I do think Bitcoin could see a decent sized correction over the past few months. I haven't really seen people have a lot of success selling out of their positions to try and buy them back lower. Because normally what happens is maybe you sell and you're right about price dropping, but then it's very hard to put all that money back into the market in time because you end up waiting for lower prices, which maybe never end up getting reached. So I like to zoom out and have a longer time horizon, hold assets that I consider to be a little bit less risky than a new altcoin that launched yesterday or some new meme coin that's really popular. I consider Bitcoin, Ethereum, and Solana to be the three blue chips of this market, and I'm willing to hold them through drawdowns like the one I have outlined here in the normal cycle. This could even go a little bit deeper, something like this. I have no idea how low it goes, but I just want to be prepared for multiple scenarios because in the long term, I think we're going to go right back to currency devaluation eventually. The timing is obviously the tricky part, but as long as I'm positioned for it, I think I'll be able to benefit from that move eventually. We also have a very important inflation print coming up on the same day as that FOMC meeting. And of course, I'm sure the Fed does get that data early, but we're going to have to see what CPI and core CPI end up coming in at on Wednesday. We know that inflation is still above the Fed's target, but it's close enough to where they likely start cutting rates if something breaks in the economy. But I'm sure they would love to keep these rates higher for longer if they can and let inflation continue to work its way down. Because believe it or not, there's also a pretty great inverse correlation between the dollar index and CPI as well. As you can see here from about 2015 to about mid 2018, dollar index lower highs and lower lows, CPI going up. And then after 2020, we had a huge drop in the dollar index and inflation absolutely took off. Dollar index goes up aggressively as the Fed starts hiking rates. Inflation comes down aggressively in white here. And the dollar index has been chopping for months now. And CPI has also been stuck at that 3% range, chopping around for months now. So the Fed does want a strong dollar index for now, as long as they can. Their hand is going to be forced aggressively, but it might still be a couple of months before we actually see that big drop in the dollar index that we want to see if we're going to have that Bitcoin mania phase that we all want. As for Bitcoin itself, it's amazing how these sellers keep showing up above 69 to 70,000 and putting price back below that level. I don't think this week's price action before Wednesday matters that much. I do think what we see from the Fed on Wednesday is going to decide our next direction based on what they put in their projections and what Powell says in his speech. But as of right now, it doesn't look too bad. Maybe comes back down to the 20-week moving average, then goes higher, maybe breaks below. It's hard to forecast until we actually see what Powell says on Wednesday. The S&P 500, on the other hand, looks very strong, just continues grinding higher, which is what it tends to do over prolonged periods of time. And I'm sure a lot of that has to do with the huge deficits being done by the federal government, on pace to be about $2 trillion this year. And we're not even in a recession yet. And of course, they're using these federal deficits to keep GDP positive. According to the Atlanta Fed, they're expecting GDP above 3% for Q2. The standard forecast among the major firms is 2.1 to 2.2. And as long as GDP is positive, even if they're using these huge deficits to do so, we can't technically be in a recession until we have 2 quarters in a row of negative GDP. But I don't know how that negative GDP can occur as long as they're running these huge deficits. So in terms of the labor market and how quickly it's easing, it feels like we may be on the verge of a recession. But if we look at GDP, it might remain positive going forward because they're using these massive deficits to keep GDP positive. So we'll see how that plays out and we'll monitor it. But the S&P 500 does look good. And this is standard for election years. The S&P 500 doing well has a huge correlation with re-election. So I'm sure they will do whatever it takes to keep the market strong until at least November. But of course, the S&P 500 can diverge from Bitcoin like we saw in 2019 when the Fed started cutting rates and the S&P 500 kept going up, but Bitcoin had its mid-cycle cool-off even though the S&P 500 did that. So we'll continue to monitor the S&P 500 because it is the benchmark risk asset. But as of right now, S&P 500 does look pretty good. As for Ethereum, really no changes, just kind of consolidating and slowly working its way down after that huge move. Still looks pretty good in the short term. And of course, we're still waiting to figure out when the Ethereum spot ETF launch date is going to be. I do think markets will react to that event. As for Solana, also consolidating, big spike up that week that Ethereum got its ETF approval, has been going sideways since. So it's really just been a lot of chop over the past few weeks. I'm still comfortable with my positioning, but don't feel the need to buy any more or sell any or make any huge changes until we get some insight from the Fed in the upcoming projections. But as of right now, it just looks like some chop and consolidation, wrecking leverage traders left and right with the lower summer volume. As for Bitcoin dominance, still slowly working its way higher. Of course, if we are going to have this mania phase at some point, it's also coincides with huge drops in Bitcoin dominance. And as long as Bitcoin dominance continues to work its way up, remaining in the more blue chip, less risky assets is my preferred approach. But we'll always continue to monitor Bitcoin dominance to see when that reverses. And I wouldn't be surprised if it does start dropping aggressively when we see that drop in the dollar index, like we saw in the past two alt seasons in early 2021, late 2020, and in 2017. But anyway, let me know what you expect. Is the dollar index going to start dropping aggressively soon, or will we get this spike up going into the end of the year while the Fed keeps rates elevated as the other central banks are forced to ease? Would love to know what you guys expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.